When it comes to managing personal or business finances, it's important to know who to turn to for assistance. Two of the most common titles people encounter in the world of financial management are accountant and certified public accountant, CPA. While both roles are critical in ensuring financial records are accurate and tax obligations are met, there are significant differences between the two. These differences can affect the level of expertise, the scope of services offered, and the qualifications required. Understanding these distinctions will help you make more informed decisions about who to hire based on your financial needs. This video explores the top 10 big differences between an accountant and a CPA. 1. Certification and education requirements. One of the most significant differences between an accountant and a CPA is the level of education and certification required. While both accountants and CPAs hold at least a bachelor's degree in accounting or related field, a CPA has additional qualifications that an accountant does not. CPAs must pass the rigorous Uniform CPA examination, which tests knowledge of accounting principles, auditing, and taxation, among other subjects. In addition to the exam, CPAs are required to meet specific state licensing requirements, which often include a certain number of hours of continuing education to maintain their certification. On the other hand, accountants are not required to pass any professional exams or meet the same ongoing education requirements. 2. Legal authority. A major difference between accountants and CPAs lies in the legal authority granted to each role. CPAs are licensed professionals and are legally authorized to perform certain duties that accountants cannot. For instance, only a CPA can audit financial statements and sign off on them for publicly traded companies, which is a critical service for ensuring compliance with government regulations. CPAs are also authorized to represent clients before the Internal Revenue Service, IRS, in case of audits, providing a significant advantage over accountants. Accountants, unless they have achieved CPA status, are not legally allowed to sign off on financial audits or represent clients in IRS matters. 3. Scope of services. The scope of services offered by accountants and CPAs can differ significantly. While accountants are typically involved in preparing financial statements, bookkeeping, and maintaining financial records, CPAs often offer a broader range of services. CPAs are qualified to perform audits, review financial statements, provide tax advice, and even represent clients in front of the IRS. Additionally, CPAs can provide consulting services on financial planning, budgeting, and tax strategies, offering a higher level of financial expertise. Accountants, in contrast, may focus more on day-to-day recordkeeping, preparing taxes, and financial reports without delving into higher-level advisory roles. 4. Specialization and expertise. CPAs typically have a higher level of specialization and expertise compared to accountants. While both professionals are trained in accounting, CPAs often have additional expertise in areas such as tax planning, auditing, and forensic accounting. Many CPAs specialize in specific industries or types of accounting work, such as corporate taxation, estate planning, or international finance. This allows CPAs to provide in-depth, specialized services to clients who need more complex financial advice. Accountants, while skilled in general accounting practices, may not have the same level of expertise or specialization and tend to focus on routine tasks like bookkeeping and tax preparation. 5. Ongoing education and continuing professional development. Another key difference between accountants and CPAs is the requirement for ongoing education and professional development. CPAs are required by law to complete continuing professional education, CPE, to maintain their license. This ensures they stay updated on the latest accounting standards, tax laws, and regulations. The number of CPE hours required varies by state, but it is generally around 40 hours per year. Accountants, however, are not typically bound by the same education requirements. While accountants may choose to pursue further education to advance their skills or specialize in certain areas, they are not legally obligated to continue their education in the same way CPAs are. 6. Cost of services. The cost of hiring an accountant versus a CPA can differ, largely due to the differing levels of expertise and qualifications. Since CPAs have more extensive education and certification requirements, their services are generally more expensive than those of accountants. Additionally, CPAs often offer more specialized services, which can also contribute to higher fees. Accountants, on the other hand, tend to provide more basic financial services like bookkeeping and tax preparation at a lower cost. When deciding between the two, it's important to consider the complexity of the services you need and the budget you have available. 7. Tax filing and advice. Both accountants and CPAs can help with tax filing, but the scope of their involvement can vary. Accountants typically help clients with preparing and filing tax returns, ensuring that all necessary forms are completed correctly. CPAs, however, can provide more in-depth tax advice and strategy, offering assistance with tax planning and minimizing tax liabilities. Because CPAs are licensed and have passed the CPA exam, they are often better equipped to handle complex tax situations, such as those involving multiple income streams, business taxes, or international tax laws. Accountants, while capable of handling basic tax filing, might not be as well versed in advanced tax strategies. 8. Professional standing and trustworthiness. Because CPAs are required to meet high standards of education, testing, and ongoing professional development, they are often viewed as more trustworthy and reliable than accountants. The CPA designation is a mark of professionalism and credibility, signifying that the individual has undergone rigorous training and adheres to a strict code of ethics. CPAs are held accountable by state licensing boards and are subject to disciplinary action if they fail to meet professional standards. While accountants may also be competent and trustworthy, they do not have the same level of oversight or formal accountability as CPAs, which can impact the level of trust some clients place in their services. 9. Client representation. CPAs have the ability to represent clients before the IRS, which is a key benefit for individuals or businesses facing an audit or tax dispute. If a client is selected for an IRS audit, a CPA can step in to provide professional representation, helping to navigate the audit process, communicate with the IRS on the client's behalf, and ensure that the client's rights are protected. Accountants, however, do not have this privilege unless they have attained CPA status. This is a significant difference that may influence your decision to hire a CPA over an accountant, especially if you anticipate dealing with complex tax issues or an audit. 10. Ethical standards and code of conduct. CPAs are bound by a strict ethical code of conduct that is enforced by state boards of accountancy. This code requires CPAs to maintain the highest standards of integrity, objectivity, and professionalism in their work. CPAs must adhere to the AICPA, American Institute of CPAs, Code of Professional Conduct, which governs their behavior in the workplace and their interactions with clients. If a CPA violates these ethical standards, they can face disciplinary action, including the loss of their license. Accountants, while expected to act professionally and ethically, are not bound by the same set of rules and regulations and may not be subject to the same level of oversight. In conclusion, while both accountants and CPAs play important roles in financial management, there are significant differences between the two professions. CPAs hold a higher level of education, certification, and professional standing, allowing them to offer specialized services such as auditing, tax planning, and client representation before the IRS. Accountants, on the other hand, provide more basic financial services and may not have the same level of expertise or legal authority. Depending on your financial needs, it's important to understand these differences so you can choose the right professional for your situation. Whether you need help with routine bookkeeping or complex tax planning, both accountants and CPAs can offer valuable support, but their qualifications and services vary greatly.